Good evening, everybody, and welcome to another edition of Live Market Analysis. In theory, it's the first one back, certainly the first recording back since I was on holiday. We did have one last week for those who may have been wondering, but we had some technical difficulties, so unfortunately we weren't able to record it. But hey, those problems, as you can see, have resolved themselves. There are some problems in the markets, however, that have not resolved themselves, and we'll talk about all of that stuff and a whole lot more after we discuss the disclaimer, which just says that everything we're going to discuss is general in nature. It has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this general information, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. Always, it's important to remember that trading, investing is risky. You could lose money, probably going to lose money at some stage. It's always you who's responsible for the stuff that you choose to do with your money and not me. Other than that, the agenda is pretty straightforward, and it's the same as what it was before my holiday, which is you ask questions, I'll give you my best technical analysis reader. But it could be also about the 3 M's of trading, so anything to do with your methodology, how you get in and out of trades, your money management, how much you risk when you do, and your mindset. How do we think in an appropriate way about our trading? Okay, let's head over to the Amy broker screen while those requests are coming in, because I like to start over here on the Nasdaq Composite and talk about our portfolio management model. And this is a model that overrides any individual trade that we take. So if you look through your portfolio, hey, you've probably got BHP, Rio, Fortescue, the big 4 banks, I don't know, Wesfarmers, Telstra, some coal, some Woolworths, all of the usual stuff. Well, you probably don't if you listen to me. And they are individual trades. How much you risk across all of your portfolio, across your capital, how much capital you have to risk, that's what we're dealing with here. And of course, we segmented into the Nasdaq Composite, which covers our US portfolio for those investing in the US, many of you are. And we're going to look at the ASX 200 in a second for our Aussie portfolio. So in the US, we are, well, we're actually still risk on, we're still FRP, with a caveat, of course, given those last 3 or 4 black candles, but the trend is still up. That's my point. Still short-term uptrend, still long-term uptrend. It is still full risk position, but as we've discussed a couple of times in my evening wrap I write for Market Index, which is the way I talk to you, I guess, outside of these Monday night sessions, the bias has been for at least a couple of sessions now, or I think since Tuesday's candle. So that's Tuesday's candle. I think we did the analysis on Wednesday. We said start to think about not adding risk if you can avoid it. If you don't see that perfect setup tonight, don't add the risk. Be more aggressive at maybe trailing stop losses or holding your existing portfolio to account with the mindset of reducing risk on your existing trades, and or in addition to those 2 first factors is adding some short side risk to give yourself some protection. So that sort of made sense on Wednesday. Then we got to Friday and we saw this candle. It made a lot more sense, and I re-added that idea, but with a bit more force. Not knowing that, Friday was, I never know what's going to happen next, but not knowing that Friday was going to be a pretty nasty little wipeout there. Big gap down, low close taking out 27.50. And that in itself suggests that we're on the right course there. Officially, when we'll be at 1/3, I don't know, it probably just happened by its own accord based upon the stuff we've just talked about. But more officially, look at close beneath the short-term uptrend ribbon. We never like that, do we? That will close us beneath 2 static points of demand in 27.50 and 25.07. We don't like that either. And we're talking about in the absence of a lower peak on similarly supply-side candles, which is the natural way that we would get 1 notch down, which is a 2/3 risk position. We move obviously in thirds. So there's the baby. It's still in the bathwater. Some of the bathwater's been removed, but the baby's still very happy where it is, I think, is the summary. Let's head over to the ASX 200. And I know some of you probably think, oh no, Carl, I've sold everything already. I'm out. Okay, well, that's fine. You do you. But the model isn't suggesting we do that just yet. And I find it's better to stick to the model. On the ASX, and we saw today it was a good idea to stick to the model, which is still double greens. Price action is actually, it's higher peaks and lower troughs, isn't it? And to confirm that, if you're wondering what I'm talking about, price action, that's our relative position of our peaks and troughs. And we have a little high peak through here. There you go, that's a high peak. And because this low here, today's low is lower than that trough, we're going to have a lower trough. Even if we have an up day tomorrow, it'll form today's low as a lower trough. So it's guaranteed high peaks and lower troughs. So not lower peaks, lower troughs. Not the end of the world. Again, today's candle, I think, was surprising and reassuring that there's still plenty of demand in the system, and it's hovering around exactly where we think it should be. And that's always a good sign, isn't it? If areas of demand are acting as areas of demand. As long as 86.43 holds, I'm pretty happy. Again, above the short-term uptrend ribbon, I'm pretty happy. You'll know when I'm not happy because I'll write about it in the evening wrap. Happy to go FRP here with less of a desire, actually, to do those three things before. So to be really strict on entries. We're always strict on entries, but to be really, really strict on entries, to pare back existing risk or to take shorts. You can't find the shorts. There's no shorts anyway. If you're wondering, that's how many potential shorts I found, and they're a little bit gentle, aren't they? Ordinate there, AX1, that looks half decent. Boss Energy is just sticking with the prevailing trend. That maybe looks like there's a bit more of a move about it given today's candle, as is that one. That one's a bit gentle. Well, that one's, where's it going to go anyway, but staying short on that one, like that's it. So there's 10 stocks that met my criteria for shorts, and there were substantially more that met my criteria for longs, and that's the shortlisted shortlist. There are way more than that in the broader list, which you'll see tomorrow, because I might as well just head back over here and just remind everybody about the evening wrap, which is that one there, of course. That is tonight's evening wrap. And if you're uninitiated, many people are coming to this recording for the first time. Where do we talk about the Nasdaq every night? There it is there, Nasdaq Composite. And I went on a bit of a long rant today, didn't I? I told you my conspiracy theory, because that was one hell of a non-farm print. I don't know how long you've been paying attention to non-farm prints, but I've been paying attention for decades. And that was a bit of a doozy. Look, the 73, that was low by historical standards, but the revisions, I don't remember ever seeing revisions like that. 2 months, previous months revised down that much. And of course then we had poor old, I can't remember her name, but she got the sack. She is now on LinkedIn with the hashtag open to work sign, because she would have had a wonderful job there. Imagine being the boss of the US Bureau of Labour Statistics, and now she's out of work because President Trump said she was not qualified and or politically biased as well. So how do you trust your data when you can just fire the person who's responsible? I doubt she fudged it. But it just, that Tuesday candle now kind of makes a lot more sense, and certainly the Thursday candle. It's all that selling into that great Meta and Apple rally as well, which we then, as journalists, after the fact, we kind of blame, the PCE wasn't that great, and that's why. Then somebody knew what was going to happen on Friday. That's just my working theory on that one. Thumbs up if you agree, thumbs down if you think it was pure coincidence. But I digress, and I need to stop digressing. The only thing I was going to show you there extra was, again, for the uninitiated, was the technical analysis, which has dropped off the screen somehow. There it is there, chart watch. So if you go there, you get my daily scans as well. Okay, let's head back over to here and to here. And we're going to do the whip around the grounds, because we're going to see if there's anything that'll push us off this theory of still full risk position across both markets, way more tentative in the US than we are in Australia. It's pretty rare that we say that too. I want to go to the Russell. That's probably the most interesting one for all of us, isn't it? To see if we're seeing the stuff sort of beginning in the composite occurring here in the Russell. And look, it has taken out, it's a much sharper fall, isn't it? I mean, we get all excited about what happens in the comp, but that's a decent little whack there, and taking out that trough there. That's not a trough, so just one coming back. It's closing beneath the short-term uptrend ribbon, coming back and touching. Look at that, perfectly touching the long-term uptrend ribbon. Enough to push me off a thesis. It's confirming my desire for caution, but not enough to change the rating. Heading over to France. where I spent a couple of weeks and not looking too good there at all. They are big black candles, and a nice breakdown actually on the DAX. We don't want to see this coordinated, synchronized turnaround in the greatest of all risk asset classes, which is stocks. And to some extent, we're seeing it there. That's disturbing. I don't like that. It does also indicate that there's some trade-related stuff going on as well. The Swiss 35% tariff on watches, chocolates, and whatever Roger Federer is doing right now with his billions of dollars. Hang Seng, I was there as well. I paid 17 Swiss francs for a Toblerone, so I could take the picture of the Toblerone in St. Martin in front of the Matterhorn. So that roughly $2 Australian to a Swiss franc, that was a very expensive Toblerone. So maybe the Swiss deserve it. The Hang Seng looks okay. Today's a really good candle. Actually, in the Nikkei was down, but then closed off its lows. So Nifty 50 is not great. Shanghai, that's great. That's a great candle there. In China, a little bit not as good there. I said a little bit better, obviously, in the first one than the second one. But still, I think we're okay on those. And let's do the base metals. We shouldn't see these collapsing, but they are a little bit there, and we know there's some mitigating circumstances on copper. We'll come back to iron ore. Nickel has tanked again. Let's tank. Tin's not so bad. Zinc. It doesn't look great, does it? There's some stuff there that the market is worried about, and that does concern me. Like I said, I want to see coordinated, consistent risk-taking behaviour. The lithium carbonate. This has got nothing to do with broad global economic growth dynamics. It's just curiosity for me. You've got to think with a 10% move in a day there, followed by a 5% move there, the first day on record volume ever, the second day on maybe the fifth or sixth greatest volume, that, and in combination with the 40% odd rally that the low is in. I mean, if it was any other market, I would be banging the drum and saying the low is in, because that's what happens at lows. With the lithium, it's going to take... I'd probably need to take out that peak really to confirm it, because lithium's done its thing. And as soon as I arrived, obviously that was the day before I arrived, that's the day I arrived, and then since then it's come straight back down. It's pure coincidence, I assure you. It is back in the long-term downtrend. You can see that confirmed there, and we're almost really, after a little bit of a bounce at the short-term uptrend, about to break back below it with a decent upper shadow today. So I'm not convinced yet. I'm not going to call it. Because it is still potentially a wall of supply that we're dealing with. I think that's it there. Let's head over to the trading views screen, and we're going to kick off with silver futures, which are probably about the same as where I left them with you last time, but a little rally and a little bit of a pullback in between. I'm pretty neutral on that. Certainly short-term trend has neutralised. Long-term trend is still up, but rather flat. Price action is not ideal, and the candles are far from ideal as well. So I can't see a case for that to go and make fresh all-time highs any time soon. Same with gold. I think gold is in an equilibrium phase. I know I can see there that short-term trend ribbon is very, very flat. Long-term trend ribbon up like silver, but still flattening out. Also, price action very, very mixed, telling me that the demand side and the supply side are roughly balanced in their views of where gold needs to be right now. And there's lots of demand, there's lots of supply, and they're just roughly meeting at a very similar price. So not expecting that to do much anytime soon. This is a bit of a weird one, of course, with Trump surprising the markets on what he didn't put tariffs on, of course, which meant there will be more copper around than the market thought in the US, and that means, unfortunately, more supply, latent supply lying around that was trying to front run the tariffs. It now needs to work its way through the system. So that move is commensurate with that. Iron ore, half decent. It's still in a very broad trading range, but picking up in the short term. Half decent is maybe the better side of half decent, but not getting too excited. And uranium, which was definitely on the better side of half decent, is now back to a short and long-term downtrend again, isn't it? Uranium is looking sick again. I wouldn't say it's a complete write-off at this stage, but unless it gets itself above that long-term uptrend ribbon, I'm going to say, what are we now at the start of August? If it hasn't done it by the end of this month, and that's probably giving it a couple of weeks too long, this could be in a bit of trouble here as well. And just out of curiosity, looking at some of the energy contracts there, Brent crude stuck in the middle. We had OPEC largely sticking to their quotas. No surprises. Thermal coal is flat and bottoming, and we've seen a little bit of a blip up on met coal for the same reason as lithium. You might say, what do lithium and met coal have to do with each other? Well, there is this great race to the bottom in both markets where China is the dominant supplier and consumer in each market, and through just supply chain dominance and more in the lithium market, they're just varied appearance throughout the supply chain itself. They're able to bring and keep prices down because it both benefits and hurts them at the same time. And we had this anti-involution, you go Google that word, pulse that swept through the markets while I was away. I was completely oblivious to it, but it is Chinese government policy initiative. Initiative's probably too strong a word, but it is certainly making a reappearance, where they want to dismantle some of that collateral, some of this ingrained mentality among Chinese producers and consumers of these products that margins have to be absolutely made razor thin, and then there are no profits. So how are they going to do that? I don't think they can. I don't think they will. They'll want to, but they won't achieve it, and then maybe everything stays the way it is, as tends to be the case. But I'm getting way off topic. Importantly, the whip around the grounds is just about done, because all I need to show you is the bond market, which I think responded in a very sensible way to the shenanigans last week by yields falling. We had weaker economic data, so yields will fall because we're expecting lower interest rates down the track. We've got more need from the Fed to accommodate the economy, US economy. We're seeing similar situation over here in Australia on the Aussie 2s, Aussie 10s, for your reference, are largely flat, as are the US 10s, but the 2s, again, it's just short-term yields. This is a short-term yield story, and that's why we saw that big move on Friday. What we haven't seen as a result of this, and this is why I'm looking at the long stuff as well, the 10s and 30s came down, and that's a good sign. It's not a good sign because bad things are happening, but it's a good sign because if they went up with that set of circumstances that I talked about tonight's wrap, then we would not have been flat today. We would have absolutely crapped out, and futures wouldn't be up. We'd be back in the really serious stuff we were in late March and early April, where Trump had to backflip on his policies, where the bond market was broken. The bond market's not broken. The bond market's functioning, and that's 2 thumbs up. It's not because of good stuff. It's because of bad stuff, but it's still functioning, everybody. So that's good news. All right, let's head over to your requests now. Let me go zoom. Normal there, and there we go. And I'm going to head up the screen and just catch up with the comments here, make sure I haven't got any technical difficulties. Donna's saying hello. We'll look at your US stocks in a second. Let's go to profits as it reported. Next high close, I think you're talking about there, not NHC, the stock in Australia. Avant saying hello. We'll look at your APA first. So let's head over here, here, and here. And it all looks pretty standard there. Okay, so kicking off with APA from Avant. Last time before holiday, it was going pretty well. I'm going to say we covered it pretty close to the last time we had a session, because I've got an FRP either under that candle or that candle, and that's a great candle, there's no doubt about it. Not ideal since then. I don't know if that's a dividend. You'd have to tell me if it is. We just shift everything up to where the dividend started. Advance, give me a thumbs up. It is a dividend, so it actually doesn't look anywhere near as bad, actually. So if you shift all of that up, we're actually fine. It's just gone sideways, hasn't it? Which is annoying and frustrating, but shifting all of that up, there's no real clear signals to, I think, take risk off the table. There's a few little lower peaks and lower troughs, but they're very tight, and even the candles within them, I'm talking sort of stuff like that, aren't really decisive. So I'm just telling you how I would have handled this since then. A little bit frustrated, but probably hanging in there, either at FRP or maybe just having taken some off the table in frustration to go do something else with, and just waiting to come back and put some more risk on this at some stage. I don't think you're far away from it, because again, if we shift everything back up, then for the dividend, then we're actually starting to look really good again. So that's your clear motive candle there. A little bit of a pullback, not too bad. Very, very, very fine with Friday's price action of the broader market. That's a very, very strong showing. And again, today, another strong showing. So look, I've got no problems, again, just going FRP on this one. And if you're that way inclined, look, I didn't put this in my shortlist today because I don't know about the dividend. I can't know about all the dividends that are paid on the Aussie market. So that's the reason why I didn't. But I could see it definitely making the broader list. Whether it made the shortlist, I'm not so sure, because we might go through them and you'll see there's some really nice setups there. I'm not saying this isn't nice, I'm just saying it's probably not as good as some of the other ones I saw. But if you're that way inclined, definitely FRP, no question, and the plus 130 if that's the way you feel about it. We're not waiting for a next high candle close, are we? Because the last candle there is absolutely spot on. Let's go, thank you for that one, Avant. Let's go to MTM for Sudesh, which is that one there. Metallium has had a name change since last time we caught up. And the name is different, but the trend actually still looks largely the same. It's kind of going up, but in a bit of a choppy fashion. And the last two candles there, I think, are the key. I'm pretty sure I shortlisted that one on this morning, in this morning's update from Friday's candle. I didn't put it in today simply because of that upward pointing shadow. A little bit more of an upward pointing shadow than I would ordinarily like, but still a very good day today. White candle on a day where otherwise the market was pretty soggy, I think is very commendable. And of course, it's still very much short-term uptrend, long-term uptrend. The price action is good, but not great, only because this pullback here just made it encroach a little bit on that second from last trough. But geez, that's being really, really pedantic. A little bit of a dip here. There's some mixed price action there, but otherwise it's still very solid, like everything else. I mean, you're just getting the language is just very solid all over the place, isn't it? So long story short, having discussed the broader technical picture, would then be for me to copy really and paste that and FRP. I'm going to go just only FRP today, but if you did want to add risk today, I don't think you're going to go too far wrong. But I think next high close or next demand side candle is also a good way to go if you're looking to add risk. So yes, for me on MTM, I'm sure many of you probably have it. So at the very least, it's a hold. Let's go to David. David saying, welcome back. Thank you, David. Wondered about APE, which I put in yesterday. I'm pretty sure I featured it yesterday. So yesterday, FRP plus 1/3. Today, a bit of a nothing candle in a bit of a nothing market. Still, I think, did okay. So on that basis, FRP, happy to hold. I can pretty much copy that over. The trend is exemplary. It's unusual I get so many decent trends at the start of one of these sessions, isn't it? Normally I'm spending 10 minutes on the first one. Let's go plus 1/3 next demand side candle, and happy, very, very happy on everything else. There's nothing in that chart which concerns me at all. It is a picture of excess demand, and if I just zoom that out a little bit, we can get some more perspective. Obviously $20, we're at $20 now, but it's not a surprise. I mean, this is the first time we've been there. Yes, absolutely confirmed. But you can see it knocked it, didn't it? It knocked it, and it stayed there. It closed at 19.97. So yeah, $20 is not an issue here. If you took some off the table for $20, don't feel bad. Probably that was when you wanted to do it because it got within the 1%, that key 1% level that we talk about. That might have been the day, and then maybe you added it back there, and I ended up buying at the same price I got out. Well, that's okay because it could have kept going. That's the whole point. We take a little off the table just in case, but we're very ready to add it back on. So better read the rest of your question. Big black candle on the 21st of July, which is that one there. Okay. Yeah, look, it's biggish, but it's not huge, is it? Within the context of everything else. I think the question will be, is that a minus 1/3 signal in and of itself? Let me not anticipate. So big black candle, question mark, minus 1/3, possibly another third the next day, although significant downward shadow. So basically, I think we're looking for a case study here, aren't we? What would I have done? Well, on that day there, we talked about the $20 scale out, so minus 1/3 for no other reason, but it's a big run number. That's just what we do. It didn't quite get there that time, so you wouldn't have had the chance. The high there was only 1948, so it didn't quite get close enough. So this time I feel it did. And that's a minus 1/3. And if you didn't want to do that, because that's not your gig, that's okay, don't do it. I don't care. That day there, is that in and of itself a reversal? Look, it closed beneath, there's a little trough in there. Is it? I think it's just probably a reaction from $20. I think if you did do that third, then we're questioning a second third, aren't we? So questioning the second third, second third. Okay, questioning second third, and now I need to put that third back there. Okay, pay attention, Carl. Let's go that. So that one. Let's call that the RN minus 1/3. So that's one question. And then the next question is, well, so if you did do that, do you do a second third? If you didn't do that, well, then it becomes pretty obvious, doesn't it? Do a third. Partly because the round number, partly because the candle. So that's, I think, yeah, I mean, I can't answer that any clearer. Yes, there's a third there, but for everything. This here is no reason for another third. I can't see that. That's got a lower shadow into the short-term uptrend ribbon, which is where we'd expect there to be latent excess demand, and there was. So no reason at all for me to do anything else on that third, but continue to wait for another candle. We've got some off the table. We're pretty happy. Ditto on that day, although if we do get a close beneath that candle's low, because that's where the demand is coming in. We can see it coming in. We can see them trying to buy the dip. If we close beneath that, well, what happened to that demand? It's gone. That's concern. No, we're still okay, but feeling even more strongly about that next scale out. That's fine. That's okay. No, that's still fine. That's all good, and that's even better. Okay. Well, there we go. Now we just put a third back in, right? So, well, I can put that there, but. There you go, and that's where we are today with FRP, and I'll copy and paste that across to the next one. I know it looks a bit silly, but and I don't think you even need to wait, to be honest. So hopefully that answers your question there, David, about how I would have tackled that one. Robert, hi Carl, just wondering how to best to manage PNI. Let's have a look. Is that one, and well, there we are. Okay, it looks pretty decent to me. That's a bit of a concern, but let me finish reading the question. I'm holding, but progress is glacial. Yeah, a little bit. Maybe sell a third ahead of earnings in a couple of days. Oh yeah, look, earnings always does complicate things, and I don't mind taking a little bit of risk off the table for earnings. Third sounds very, very reasonable to me. And given you've had that candle and that candle, I don't mind. I don't mind that idea. So if that's the way you're feeling, I agree with you. Okay. And then give it a couple of days, because there's no reason to do much else apart from that, because everything else is fine. We got that. Yes, it's a bit slow, but you know, the market hasn't exactly been shooting the lights out over the last few days, has it? So this is going just fine. I know fine is a horrible word in the context of making piles of money every 30 seconds, but fortunately that's what we're getting here. So can I reiterate, it's just fine. And if you wanted to knock a third on the basis that there's some very, very moderate supply signals in the market, and there's a big risk event, that's what it is coming up, then no complaints from me at all. But happy to keep some skin in the game on that one. All right, let's keep moving. Going to go to Hayden, who's got EBR for a turnaround play. And yes, definitely, it's almost one of those continuation / turnaround plays, isn't it? Because we've had the long-term uptrend. It's obviously gone through a bit of a phase here, and now we're trying to get back on the right side of it. The last 3 days on the market have not been ideal. It's a shame because, look, I'm with you. I think on this candle here, it's starting to look very, very interesting. I think on this candle here, I'd happily actually add some risk. I think that's your plus 1/3 day. So yes, I'm with you. I agree with you. It's a turnaround play, continuation turnaround. FRP on that day there. So let me just put it there because I really want to emphasise the candle that we're pointing to, that one there, and get rid of those because we don't need them. As for what we're doing today, I think if you added risk on that day, I can't see any reason since you've added risk to do anything but continue to hold that risk. Where would I start to be nervous? Obviously, I prefer not to see it close beneath here, but even then, that's where it's going to start to come into contact with the short-term uptrend ribbons, and sometimes we just have to give these things a little bit of room. Not too much room, not that sort of room, right? But a little bit more room, and and respect the fact that it hasn't been an ideal market overall. So I'd go. I was going to say I'd go so far as to say plus 1/3 on the next high. The next demand-side candle, but maybe today's candle has just given me some pause for that. Let me see it first. Let me see an uptick, a higher high and a higher low, a new trough being set, and then I'll make that determination. But for now, just happy to sit on the risk that you might have on this one. TEA certainly made yesterday's list. Not ringing a bell for today's list because it just didn't quite have the candle, but certainly got on yesterday's list. We've got a little bit of an influence coming in here from $4. You could argue it's not your first rodeo at $4, but it probably still is going to have an impact because we didn't quite get there last time. Last time we looked at it, looks like an FRP, and really it's a ditto for me. There's of all the charts you could have, let's face it, this is actually a pretty good one, isn't it? I mean, there's not a great deal to worry about there. And kudos to you for having one in your portfolio that looks like that, because there's a few stocks out there that didn't have a great day today or the last day. So happy on that one. Happy to hold, and hey, next demand side candle, happy to add risk. Droneshield did make my list today, and with a candle like that, I know the volume wasn't huge, but it wasn't a lot of volume across the market today. That it's still a great looking candle, and the fact that we had this pattern here. So I'm talking about this big demand side candle, substantially, I'd say, above average volume. And then that candle there is great to have after you have that, because it's a very shallow pullback. Everybody gets all excited again. There's always people taking profits and very little profit taking. I think plenty of demand still in the system, and then today we've cleared out that profit taking. We're ready to go again. This is a new closing high here for Droneshield. In fact, a new all-time closing high. So that speaks volumes also, and really $4 we have actually tested into that officially, so it shouldn't really make much of a difference next time round. Really $5 I think is the big show here. So on that basis, not only did this one make the shortlist today, it also made the shortlisted shortlist, and therefore feature chart, and that's because I'm FRP, obviously, if you happen to already have it, but more than happy to add some risk as well if you don't. Let's go. Thank you for those. Hayden, heading to Amber. I exited my position in Lynas around the first week of July. Yeah, I probably, I can see why. Look at that. It did some really yucky things. I think that's a technical term. Certainly here, I'm with you. I don't like that candle. As a shot across the bow, first third, I wouldn't have complained about it there. And then I reckon it's one of those that's kind of just, Amber, correct me if I'm wrong, but just dragging you out, probably there, probably flat, probably no position, and rightfully so. I think you're right. I mean, look at that. It looked like that, and I don't know the circumstances around whatever rare earth pricing was doing or the sector was doing at the time, but I can see why you would have done that. And looking at that chart there, is it a screaming buy? Not in my book. It's taken out some pretty decent levels. It's not a sell, or a short sell into that. It's not terrible, but it's just not somewhere you're looking to favour over other areas at this stage. And then it happens. I'm sure it's happened to you before. It's not the first time, but it's just one of those that just drags you out just at that wrong time. And then there's nothing you can do. Like from those candles, there's nothing you could have done to anticipate that gap. I don't know what the gap was again. Clearly some good news on something. I'm betting something Trump administration related to do with rare earths, or China said something about restricting supply, or some silliness like that, and bang, it's on again. And you know, that's such a huge gap. You might say, okay, well, that candle's not ideal. Well, there's an upper shadow. It's into $10, but that you have to expect that that's going to happen at $10. But if you add that gap back on, it is a long white candle, and on that basis, if not just to scratch your itch and you know, alleviate some of the frustration, if you added risk back on that day, it's warranted by the price action, and certainly on that day, and then, you know, a couple of days pullback. None of those are particularly awful within the context of that trend, and then hopefully you're then getting some money back on this one, because at this point in time, I don't know if you saw this morning's update. It certainly made a feature this morning. It's gone as a feature again tonight. So FRP plus 1/3 for me, and I understand your frustration, and you're not going to get anything from me in terms of, well, I'm not going to tell you did anything wrong. If anything, you probably did everything right, and then got nothing out of it. And I know that's frustrating. And she's saying she didn't re-enter after that big candle. Wondering where you went wrong. You didn't go wrong, and hopefully I did walk you through. What can you learn from it? There's not a lot you can learn from that in terms of what would you learn? Oh, well I shouldn't get out. I should just hold on forever. Well, that's not right, is it? So the learning is, I'm okay with it. That's the learning. I'm okay with it. I'm okay with it because I can't see another way I could have traded that. Maybe the getting back in at that, because that is a huge gap. I know that candle, this candle here looks like it's not a good candle, but it is a massively, massively positive candle. So that is the only thing maybe and look at the volume as well. So huge clearing out of supply at that $10 level. Yes, there was supply there, lots of supply, because it's $10, it's Lynas. But geez, they cleared it out, which then facilitates what happens next. Let's go to Michael. I know it's frustrating. FCL, but that's Lynas too, isn't it? It is so much in the nature of that stock. FCL is still going well, and that's good to see. We're having a couple of tough days in line with a couple of tough days for tech stocks in general. I think we're okay for now. It's not ideal. I know it's frustrating when you just tell me to get out, mate, and then I'll be happy. You know, at least that's all I need. I don't even care if it goes up after that. Just give me what I need, which is that I can get out and end my suffering. Because I've been watching this for the last 4 weeks I've been in it. It's driving me crazy. Well, only you can end your suffering in that fashion. I will read the chart and the candles and the trends and try and determine what the better course of action is than subscribing, you know, giving in, pandering to our feelings. And I can still see. And that's all you have to do, really, isn't it, Amber and everybody else? You just have to call it as you see it. Now that you know what you're seeing, we're still seeing excess demand in the system. We're clearly, obviously, also seeing a bit of a pushback through here, lower peaks, lower troughs, and on that basis, we're more likely now to be thinking, well, managing risk, you know, it is the next step. Probably not adding risk on this one, but it's not wholesale getting the hell out, is it? So we're at the short-term uptrend ribbon. We're obviously tickling this trough. We've only tickled it. We haven't closed beneath it. Today's shadow shows that, yes, we tickled it. We saw some excess demand come in there. It's also potentially coming in from the short-term uptrend ribbon. It does give us, I think, a really good level under which we can now have a hard stop. So soft stop is, well, we're watching it, we're monitoring it. Hard stop is, well, it's kind of that point of no return, isn't it, for at least some of the risk on the position. So I think with confidence, I should got to take that language out of it. I know I can with confidence say minus 1/3 on a close below that level. And then monitoring very closely, I think, through there, because that might be a second, third as well. You might get it in the same candle. I hope we don't. I hope we see a nice recovery in the US tonight. That's what I want to see. And nice white candle tomorrow on this one, and it just works through. It's a little bit of a funk there. It's copped a bit of a bad run on the Nasdaq, which ideally it goes the other way for tech stocks. So something like that, and there's nothing to worry about. In the meantime, I'm still holding a full risk position because it hasn't given me a reason, I think, to do much else. There's a little dink in there as well that I've missed, isn't there? There's a tiny little dink, but I don't think it's enough. It wouldn't have been enough. You're so far above the short-term uptrend ribbon at that stage. You're so far above that point of demand that it's not enough on that basis, I think, to knock a third at that stage. And then you got this candle here, which just reinforces everything that we should be seeing on here. And I know the last 3 days on the composite, we know from Tuesday has not been ideal. Okay, so FRP on that one, for me, that's how I feel. And again, everybody gets to make their own call based upon the way they see it. Okay, let's go to Zoom normal on Highcom. I won't delete it all yet. That can't be Zoom normal. That's Zoom normal. I was going to say I'll delete some of the stuff that's on it, but I want to just see what we had on it previously. So it looks like somewhere around here. So somewhere around here we were FRP. Hasn't done really anything since then to warrant taking risk off the table. Hasn't done all that much after that little run up to warrant adding more risk either. So I think just still running with full risk position at this stage. We have some pretty clear cut areas. I'm going to get rid of some of that stuff now, just so we can start again. And like you've got sort of that shadow there. I'll show you a few of the shadows that I'm looking at here. That one there, and is it that one there? There's that. So they're close together, and let's go with that one. Split the difference. There's a little one there as well, but certainly beneath there, I think we've got some issues. Oh, can I get away with doing that? I can, and then just extend that across again. So let me just write on the screen: minus 1/3, managing risk, close. Below, and can I say, if we down there, I reckon it's that, because we've given it more than enough time. I don't think you could run with more than a third left if we were to close beneath there. Okay, so we've got that. We're going to be beneath that. We're going to be beneath that. We've certainly had. Well, I nearly pointed to that. We've certainly had some stuff in there that is far from ideal, and it's just a bit of a long, slow decline. So, yeah, I'd say minimum of 2/3. On a close beneath that. Okay, let's go. Thank you. That one's from Michael, and FCL was from Michael. Now to Daniel. Daniel saying, welcome back. Thanks, Daniel. What's my take on CU6? Starting to look much better than when I last saw it, which was around here. Wasn't it all the way back down here? It would have kind of pulled out of its short-term downtrend we had, and it was flattening out. That's a pretty common way of turning around. I think we all agree. We've seen that before. Then we start to put in some good candles. We start to drag the short-term uptrend back into the green. And then we start to, we go from this sort of price action, and I'm skipping a few just to make a point, I reckon maybe that. Even this is a bit dodgy, obviously not as bad as it was, but a bit dodgy. But then we go into this price action, right? And by about that candle there, we're now interacting with the long-term uptrend. So it's that classic basing and turning around that we'll see so often, and then really it's just a matter of getting above the uptrend ribbon. A little bit of a dink there, isn't it? Sort of an intraday dink, and that's really a signal here that we can start to add risk again officially as a turnaround setup. I think as an aggressive setup. Really, these are decent candles, but I don't know if I would have gone just yet. Line ball, certainly that's the one that gets my attention. That one there, and those three together are ideal. And then that little interaction there hasn't done any official pullback to the long-term uptrend ribbon, and you may not get it. But otherwise, FRP, I'm not sure how that got there because maybe I must have covered it last week in the session we didn't record. So FRP last week, looks like it, and just going to drag that out and go FRP this week as well. I put it in the shortlist today. Didn't make the shortlist. Let me just move them around so we can see it better. But I think today's candle is very, very good. All things considered, broader market considered, US markets considered, and because that's where obviously the big global biotechs are, and they do influence our local biotechs the way they trade. So I'm pretty happy with that. Yeah, don't think it's all that far off being shortlisted either, because I like it as a turnaround setup. So I'm happy with that, and let me just confirm that that's more than an FRP. That's a plus 1/3. A little bit of a specky, but because obviously turnaround setups, they're higher risk, but can be higher reward also. There you go. He's based upon last week's PA and above short and long-term trend ribbons. Based on PA. What's PA? I don't know. Anyway, price action. Yes, I agree. Okay, over to Peter. I hope Europe wasn't too hot for you. It was hot in Rome and in Italy actually, but not from Perth. So I'm just noticing my tan actually compared to usual. I mean, I'm not a lily anyway, am I? But I'm noticing my tan there. So it was very sunny. Let's say that. Can I get TMG? Yes, you can. I thought it looked really good today. FRP plus 1/3. I don't think you need me to spend any more time on this than simply saying FRP plus 1/3, because why do I need to? Okay, boom, boom, boom. Happy with that one. Actually, what we should check is just if we go back, and there's a little bit of stuff back here, isn't there? Like there's this, but it's so inconsequential, that peak in the scheme of things. Like how much time was it there? How V-shaped, how significant was it among the other peaks? It's really just one of several. So I don't think that's a big deal. That's going to be more of an issue because it's the all-time high, but we're nowhere near that. So that's all pretty good for me. Let's go to WA8, which is also looking very, very strong. No complaints there. I'll just go zoom normal so we can get some perspective. I'll go weekly to get some further perspective. This one here could be a bit of an issue, so we'll just keep an eye on that, and where that's sort of banging around, miles away, nothing to worry about for me there. Happy holder, FRP. You know this one already. It's one of those choppity, not much of a candle days, but seems to be heading in the right direction. So we understand those. We go into them eyes wide open. Everything else checks out. And your other one, I just keep losing my place. WIA, which is ditto on the last one, but better. This one is much better. Price action is perfect. Look, if you can't see it on that screen, it doesn't exist. It doesn't matter, and therefore FRP. And I like this one better for a plus 1/3 than the last one, but I don't mind either way. All continuations, as you say they are, and for me, all FRP plus 1/3. Back to Daniel about USL. What about it? Trimmed at third last week as well, entered at 29 cents, took some profits at 47, holding the rest. 47, if you said I took some profits at 47 because I thought it was close enough to 50, then that makes sense to me. Otherwise, the only way you can get out at 47 without just selling for no good reason, and I know you say, hey Carl, but that was a great reason, but clearly it's come down, is on this candle here, if that made you really nervous, but you couldn't sell at 47 if you waited to the end of that candle. And even then, it's not enough for me, because really all you could see at that stage was, okay, it might pull back to 42, have a long lower shadow, then boom, the next moves through 50, and I'll regret if I sell it. That's the way I'm thinking. Wasn't the case. Didn't turn out to be the case, but that's because silver sucks, right? It really does. Trading silver is one of the hardest things you'll ever do, let alone trying to trade it through our crappy little silver stocks, which ultimately are never going to make money. Let's face it, none of them will probably ever actually mine silver and or make money out of that, let alone make money out of that. But they do have the tendency to move a little bit every next time silver tends to be in vogue. This one included. So that would have been saying, everything's just going perfectly to plan there. Let's getting set for our next big move up, and then boom, we get something like that because something happened in the US. to the silver price. Even then, that's a decent day. No, anyway, so that's by then you say, "Carl, I'm so glad I got up 47. I didn't follow your model," and I agree with you. And that's where we are. Look, there's no way I can be full risk position on this after that big move. I think 2/3 is pretty reasonable. Plus 2/3 risk position. If you were less than that, I wouldn't complain. Somewhere between 1/3 and 2/3, and seeing what we can get. And it's very straightforward now. Close beneath there, and that's, I think, where we're going. ZRP on this one, and that's just silver. That's just the way. That's just Aussie silver stocks. That's the way they operate. If you've been trading silver stocks for any period of time, you're not offended by anything I just said. You're just quietly nodding your head in agreement. Let's go to back to Hayden. Looks like great to have you chart watchers back. Yes, chart watchers, a bit like Weight Watchers, but with candlesticks. Thoughts on building more longs on CAT? Yeah, I don't see why not. Looks great. Look, the thought that jumps into my head is this thing's going to $10. I didn't verbalise it because I don't predict, right? I don't know this thing's going to $10, but my subconscious goes, that's a possibility, right? I look at a stock that's at 650 with a trend like that, and my brain just goes, the market believes it's going to 10, right? The market has this idea of insert your round number here. Like that's where they think it's going. And there just seems to be so little in the way of that happening in terms of demand supply that's visible in the market, or visible supply is not there, plenty of demand. So yeah, I no issues. FRP, even today's candle is very, very close to a reason of doing it. But if you prefer, plus 1/3 on the next demand side candle, absolutely yes from me. I think that is one of the better looking charts on the ASX right now. Let's go to Sue. Sue's got, "Hi Carl, hope you're well. I am very well, as you can tell from my tan. Can I please get your feedback on Droneshield?" We've had a look at that, and I think it looks brilliant. And NWL, both for plus 1/3. I know there's some funny stuff going on when I type things in, but if you've noticed, every time there's a ticker code that's been used before, we're actually seeing the old company. So then I flick down one more and we get to the new company. We clearly talked about what is good price action and what is not as good price action on this one. Last week, I said FRP plus 1/3 next high close, and let's just take that and just shift that over here, because I think given that we've had a very quiet week for this one, and if you had a quiet week this last 5 trading days, it's not such a bad thing, and just go, yep, FRP next demand side candle close. I don't think you even need to wait for the next demand side candle high close. It looks perfectly fine to be adding risk to this one, and now it looks very, very strong indeed. Sorry, let me do that one and do that one, and there's nothing there, obviously. So happy with both of those. So and CYL, yeah, hey, this is one of the more interesting ones, I think, today, because it is that turnaround setup, that continuation turnaround setup, if you like. And check this out. Yeah, look, I did shortlist this one today. So that's kind of your cheat sheet there. Bets just look. I know it's slow and steady, but who knows with this one. So that's why that got in. Obviously, big white candles. I love big white candles. This one I just couldn't fault it, and a nice volume push today. Cleared out a bunch of supply on a bad day as well. That's what you remember with these bad day. This one, Coles, is very similar to that CYL. And I like to, again, mix up my types of setups that I have in my portfolio if I'm looking for risk. And, if I've got a spot for one of those continuation setups, then Coles and CYL, I think, are really interesting. I think they're high quality. I know that the short-term uptrend isn't there yet, but you'll notice in both cases we've tested it. We've dinked it a little bit, and then we're closing above that short-term uptrend ribbon. So I think that now restarts the short-term uptrend. Obviously, in both cases, the long-term uptrend is very, very strong. And I know we've had some bad stuff, but we're trying to get in early, add risk early into this one. so that by the time we're getting up to some of those big points of supply, we're already sitting on some nice profits, and we've trailed our stops probably to break even or better on both of those. Droneshield, obviously, we've looked at. G&G, no extra explanation required. Iluka, again, a turnaround setup here in the interest of mixing things up and providing a mix of setups in my shortlisted, my feature charts. 3 just very, very solid white candles in a row there, dinking back, testing, retesting that long-term uptrend ribbon. And probably for many of you, this is, you probably never thought I'd ever think to go long Iluka after having put it in as a short. Oh, gosh, there, you know where I put it in as a short, didn't I? I probably put it on that day, to be fair, and then up a went. But also there. I want to say it there. Go back and check chart watch, but there, probably there, probably there. Right? At some stage, some of those are going to lose money, but for the most part, they made money, and that's all we want. More often than not, walk out net, looking at a stock, saying, "Look, we made some money on that stock." You do that enough stocks, you should be okay. So trends change. And you might argue also that, we actually definitely would have run it as a short there. Well, that's the day you should have been buying. Well, you're right, absolutely. The history suggests that's the day I should have been buying, but history didn't know that was going to happen. You should have bought it there because you could have got it like $2.80 or whatever it was, and now it's $5. Why are you buying it all up here? That all the way up here. Your model sucks, Carl. Okay, I get it. That's fine. That's your opinion. I'm still going to do it my way. I need to be able to measure that there's enough fresh demand coming to the system, that supply has given up their vendetta against this one, that price can possibly turn around and continue to move in the right direction. And if we look at the history of this one and how it's interacted, this is why we have this rule about that long-term trend ribbon. We don't muck around with the long-term trend ribbon, and this is just one example I know, but it's a decent example that we let it do its thing at the long-term uptrend ribbon before we get involved, and we'll never get in at the bottom. But at least we have a model, at least we have some rules that separates us from all of the people that don't have rules. JB HiFi goes without saying. LKY, nice turnaround there. Lynas, I know Amber's going to be disappointed or excited, I don't know. Newmont just keeps on keeping on. NEU, we did say FRP plus 1/3 last week, didn't we? It is coming into some excess supply, but warranted a go and still warranted a go. PNR, very, very strong. PWR, again, a really interesting turnaround setup along with Iluka. You can see a SDA, you can see what I'm trying to achieve here. Like, that could be a portfolio of stocks right there because they've got that great mix of different setups and different stages of those setups as well. So they were the ones I picked out. It might be a bit of a spoiler for the rest of the evening, but long story short for both Sue and actually Hoozle, who asked about this one as well, FRP and plus 1/3. On that one, don't need to wait for any next demand side candle. Perry's got a VMM, which I ran yesterday. I'm pretty sure I ran it. Did I run it as a feature yesterday? I feel like I did. And if I didn't, then I'm regretting after today's candle that I didn't. I definitely ran it today. Did I run it? I did run it today. Because I felt that this one might have challenged a few people yesterday. So yesterday's candle, I ran it. I'm pretty sure I ran it with just that. It was definitely on the shortlist. And I thought, okay, that might challenge a few people because it's not like just obviously a great candle, black candle closed down on the day, but it's had such a great run. And if that's your pullback after that run, so if you've gone really from sub 20 to 120, you put on $1, right? I said 500% increase, and that's your pullback. That's a good pullback, all right. And especially you can see the interaction with the dollar and that long lower shadow. So that one for me was a bit of a no-brainer yesterday. And I'm not just saying that because today it was actually isn't up that much today, is it? But we know that's a great candle. So most people are going, okay, it actually didn't go up because what was it? Where did it close yesterday? 106, 112. So people go, 6 cents. That's a good day. But we look at that and go, actually, that's a really good day and that's a really good setup. So yes, for me, Perry, on that one. I think that's very interesting. It is, just smacks of just so much latent demand in the system. I've got no idea what these guys do. I know Perry has no idea either. But whatever they're doing, it must be pretty darn good, okay, to look like that. That demand that just won't quit. I mean, you know what that feels like. That having that, I shouldn't have said that. You know what that feels like, watching a stock where you feel that demand just won't quit. I know you know that because you've probably been short that stock, or it's the one you chose not to buy, right? So you know that feeling. Let's try and get on those stocks. Plus 1/3. I know the one you bought. Supply wouldn't quit. Let's go plus 1/3. We don't need to wait for anything. Plus 1/3. And FRP. I should write that as well. I know it feels like that sometimes, but it's not the case. You put yourself in enough situations like this and you're going to somehow mysteriously find yourself on the right side of things. How about that? Let's go to, what's the time? Okay, don't put any new ones in. So, oh gosh, I should have done that earlier. Matthew's got the last one. He's got some US ones there. Let me pick up the paste because I'm once again, I'm talking too much. Again, let's go to Al. I think that's Al, because I don't think it's AI that's joining us tonight. Hello, Al. Does anyone else have issues seeing Carl's charts clearly? You may be having an issue, Al or AI, because it could be internet connection. I know that's a big cop out saying, "Oh, it's your internet," but if other people are having it, then it could be my internet too. So I don't know. Somebody maybe give us a shout out. I did get upgraded to like a 500 megabit download and something crazy upload over the break. So I'm pretty sure it's not at my end because there's some pretty good speeds. But it could be. So let me know. FRS is the next one. Let's go here. Let's go FRS, which is ringing a bell. That's Forestania Resources, if I'm not mistaken. And look, didn't do a whole lot today, but certainly got my attention yesterday. FRP on that one, no doubt about. And, plus 1/3 on the next demand side candle. But that's been a fantastic trend. Wayne is confirming not the best viewing. Okay, well, they're having a chat. Andrew's saying it's fine here, which then, that always... Mark's saying it's blurry, so now we've got a few people. Keep TV open on my second screen. So he's got some sort of solution going there. Share price is missing on the right-hand side. Might be your settings. Okay, you guys, I think, may have sorted it out. Let's go to EZZ. And, oh, that's frustrating, isn't it? Let me get rid of all this stuff. Let's delete all that stuff. And this is one of those death by 1,000 cuts. No sort of really clear-cut and obvious exit signal, is there? But you would be forgiven at some stage to just say, look, I can't do this anymore, and just be out of it. And I think that's where we're at. At most, and this is the beauty of this, the model is you don't have to be out of everything. You just keep a little bit on the table. I know you might end up with some of these shrapnel holdings, and you have a point of no return for those as well. But let's go in brackets, at most, you might have a plus 1/3 on it if you've still got some faith in that one. But no, I think with ZRP on that one. Oh, there you go. Michael says he's in that one losing patience. Okay, thank you to everybody who tried to troubleshoot Al's technical issue. Paul's meat geek note taker saying that the meeting is going too long. I agree. NVU chart interested in VU. I think that's what we're talking about. Pinned. Don't know what that means. That's okay. Let's do the analysis just in case. Looks very, very strong. Again, ideally, last few candles a little bit stronger. It's a bit disappointing, but I don't think you can I don't think you can quit it just yet. Where are our points of no return? I wouldn't want to see it close beneath there, and I fear by beneath there we are ZRP, right? And I'm just going to put manage risk here, whatever that is, 1/3 or 2/3. I'll leave that up to you, but just sticking it out. We're just interacting with a short-term trend ribbon. We've still got a decent point of demand there. I know we've closed beneath that one, but it wasn't one to do anything about. And these candles in and of themselves aren't deal breakers. Look, these two together, they're far from ideal, but again, it's not you're Nostradamus if you're predicting today's down day off those. It's not that bad. So let's go FRP in the meantime. And I know we're seeing some frustrations here, but that is a little bit to do with the broader market, unfortunately. We will look at US stocks very, very, very soon. We're still getting through some of these technical settings. Wayne saying that's better, so that's good news. Everyone, if you can't see, oh, here we go. Daniel's solved the problem. If you can't see the screen properly, click on the bottom right 3 dots icon, Meeting Tools. It will make the screen fit your window. Try that one. Iluka we've talked about. PWR, I'm pretty sure we talked about as one of those really interesting turnaround setups. I really, really like that chart. Let me prove it to you by writing FRP and plus 1/3 on the screen. And another one which I had shorts. It was in my short trade setups for so long, and it's really rewarding for me to see them pop up in the long ones because it means my system's working. And we did VMM for you, Haraju. Great to hear from you again. Matthew was where we're going to stop, and I see a few people commenting on the technical things. Okay, we're going to US stocks now, okay, but I just want to catch these last comments. Peter's viewing fine. Something about his iPad. Carl, can you send the TradingView scan lists again? Yes, the TradingView scan lists are back. I don't send them, but you just go to your TradingView and remember how we get them through here, right? The uptrends and downtrends list, and then you can just do this. And there you go. And that makes life a lot easier. So they are back, and well, they're not back, they never left, but they're up and running again. Okay, so if there's an addition of ChartWatch on the website, then this thing is working, okay? And that's the broader shortlist. So obviously you guys are extra lucky. You get the feature charts in advance. Everybody has to wait till tomorrow, no big deal. But that's the broader shortlist. So I want people to be able to go from that broad shortlist just to those feature charts. That's a skill I think you need to develop. Okay, we're going to stay here because we're going US stocks now, heading back up the list. And we're going to kick off with Matthew, who's got LC Simply, and that is Lending Club Corporation. Nice pop there. A little bit of a pullback into the gap, not surprising, pretty mild. Ideally, they don't pull back much at all. I mean, this candle could be better. That's all I'm saying. Often you see the big move and then they just rock solid. So that's a little bit more than is perfect. Okay, so I'm trying to choose the right words here. It's not bad. It's just could be better. But we do love the gap. We love the gap. You can see earnings has caused the gap. So I love nothing more than buying after a big earnings gap. Why did we see a bit of a pullback? Well, probably because it was pushing into some pretty heavy hitting areas of supply. So it does make sense. This is the key candle now, isn't it? Okay, so that's Friday's candle. We know the broader US market got whacked on Friday. So to get that candle, I think is a pretty darn good thing. I was going to say I'll reserve judgment on plus 1/3 until I've seen them all. Well, that's what you should do. I don't have that luxury, do I? I've got to make a call, I guess. So plus 1/3, yeah, I'm going to go with it. Obviously FRP if you've got it. But where do we're just going to need to, we can probably run a really tight stop. You know, it shouldn't trade beneath that. It shouldn't close beneath. It can trade beneath it, but it shouldn't close beneath that trough from Friday, right? So if that's 14.66, but I'd give it a bit of room, like a 14.20 or 14.30, something around there, 14.27. It sounds like a nice number to me before I push out of that. But it does, I think, give me a nice tight stop on that one. So look, I want to see the rest of it. It's the first one, so let me crack the knuckles a little bit on a few of these, Matthew. RMBS is the next one. I like this one better than the last one simply because the trends are better, full stop, but also it's taken out the big points of supply. Very similar chart than the last one, interestingly. If I head back to the weekly chart, because this one now warrants looking further back, so we are taking out obviously those more recent points of supply, but we can see a bigger one historically that's just off screen out here is now coming into play, but we're above it. So that's our test. So the reason why we're having a bit of a pullback here is we're just seeing some of that supply come out. Of course, two really terrible nights in the US. So everything here checks out for me. There's all of that stuff makes sense, which makes me like it even more. Okay, I like it when stuff makes sense. Plus 1/3 for me. I know the candle could have been better. We could have closed right on that high, but again, considering how bad Friday's candle was, more broadly speaking, I think that's a very commendable performance. And I love to buy things. As you know, there's that earnings again. I love this. This is a better candle though, Matthew. You have to agree. If we're choosing, that's why I said, I want the benefit of seeing a few first. And you could not have given me two better stocks to analyse at the start, so I can make the point that when you get to this one looks so much better than the last one for me. So I'd favour that one. Let's go that one. We'll click save, I should say, and move on to your third one, which is CECO. But both solid. Let me get rid of that, and type it in so it actually do something now. Oh, they've got very similar setups, aren't they? Let me go here. Well, this is the best of the lot, simply from the fact that it's just cleared everything and it hasn't even pulled back. Will it get one though? Will it get one? Like Friday's candle was that slight indecision day, some acts of indecision, that upper shadow, that lower shadow, but still close on the right side of the balance point, which is sort of halfway of the candle. Will you wait for something that might not come? And again, this is kind of the beauty of the system is, look, you don't have to ask those questions. Just add some risk. And if it pulls back, you might get a better price to add the rest of the risk. So I think we can do that. I think we can afford to do that here. Get some skin in the game, get some money on the table, and then we may actually be buying a similar sort of candle to the last one we saw, which is that sort of lower shadow, higher close in the not too distant future. But look, happy to go with all three of those. I think the last two better than the first one. Moving up the list and only trying to pick out among all of those words that you've written, the US stocks ZWS, which is Zern LK Water Solutions Corporation. Oh God, I love the US. What the hell is Zern LK Water Solutions? What segment of the economy is that operating in? And the beauty of the US is there's got to be a stock somewhere that's benefiting from whatever's happening in the economy, no matter what, because there's just so many stocks doing so many things. That is a ripper. Again, earnings, we're seeing some of these positive earnings. I love to buy positive earnings moves. That's just perfection. I cannot fault this one. And Perry, I'm sure you're liking at the very least Matthew's last two, and Matthew's, I'm sure, paying respects to this one here also, because it's very, very solid indeed. So plus 1/3 FRP if you've got it, and there's nothing in that chart which tells me that I shouldn't own some. APP, I click save, didn't I? APPF. Appfolio. There we go. So that's another earnings move, and I suspect into the clear also, and therefore can't fault it. And some of you are going, hey, I can't buy that. In a million years, I can't buy a stock that's gone up that much. I won't buy it, Carl. I don't care what you say. I should do. I'm not doing it, mate. Because as soon as this little black duck buys it, Carl, that sucker's going down. Like, if you want to see the best stock in the world turn into the worst stock in the world, you watch me buy it, mate. That's not true, okay? It's got nothing to do with you. If it's going to go up, it'll keep going up. If it's not, it's not. But the reason why, Carl, I never get those ones that go up like that, okay, because you don't buy them. You don't give yourself the chance to get them. Thank you, Perry, for those two, and in advance for your last one, no doubt. There we go. And again, see, look at that day. Like, ordinarily we think that's too expensive, and we think that's got to come down. That's our brains. But the rest of the market thought that's not too expensive. It's not going to come down. I have to buy in. Look at the next day. It was up again. It defies normal human being logic. And that's why, ladies and gentlemen, trading is not easy. It is hard to do because you kind of have to think a little bit differently from the rest. But not the rest, because there's plenty of people buying this one, of course, and the others. Thank you, Perry, for those three. We're going to Nicola. Hello, Nicola. We're going to LYG, Lloyd's Banking Group, which I'm pretty sure last time we looked at it was looking pretty good. It hasn't done a whole lot for you, has it? But looks like we've got some good earnings there, and maybe even a dividend paid as well. A dividend coming up tonight, perhaps. But I'm liking that last candle. Could be better. Could have closed on the high, but it also could have been a lot worse too. So no, I'm pretty happy with that. I can just. Is it a plus 1/3? Look, the close could have been higher, but I think we're kind of splitting hairs here. So happy to go with that as well for you. And moving back up the list, thanks for that one, Nicola. It was an interesting candle on Friday because the rest of the market crapped out, didn't it? Back up through the technical support. Thank you, everybody, for helping each other out. I do sincerely mean that, because that's what this get-together is all about. And I'm going to apologise, I think, if I've missed any other US ones, because I'm up at Adonis, and if you put yours in after Adonis and between Adonis and Nicola, then let me know. But Adonis has got Qualcomm, a very, very old technology stock here. Looking a bit stuck in the middle, isn't it? Are we going for a long or a short here? Qualcomm. Not sure. Adonis doesn't say. I think it's neither here nor there. I don't think I could go long or short. Okay. Look. I think it's. I was going to say it's aggressive. Well, I guess because it's both long and short. Not that long ago, isn't it? Maybe it's not that aggressive. I think we're back beneath the long-term trend ribbon. Well, the short-term trend is not yet down. So, look, I think it's a bit of an aggressive one, Adonis, on the basis that we're still waiting for some price action short-term trend. But no, it's okay. It's an okay from me. I can see what you're going for. I love this candle, love a break. And as much as we said we can buy those big earnings moves up, what we're looking at here is an earnings move down. Hey, if we kept looking through all the US stocks, would we find something with a slightly more established long-term trend, or at least a test and a dink beneath the long-term trend ribbon? Yes. And that's why I'm saying I think this is a bit of an aggressive one. Oh, let's go minus 1/3. But I can see where you're going with it. So I don't think we need to write FRP, but we are going minus 1/3 there on the basis of short on that one. Let's go check out your other one. And I totally agree with this idea, Adonis, of trying to get some of that short exposure in the system. So let's try Verizon. I think you're going more for a long on this one, but it's a bit flat again, isn't it? So I don't mind it, but I think some of those other ones we've seen are going to be an easier run, because there's plenty of just overhead supply, just sort of nagging away at this one. Plenty of demand as well, trying to take them out, but it's still a little bit undecided at this stage. So FRP, yeah, I can see a path to sticking to what I got. And if I saw another demand side candle, it wouldn't have to do much. Like, it's not far away. We're currently trading around 42.88, but it's more like a 44.88, ish. Then I could certainly go the plus 1/3, because it would then start to look like it's starting to move into a new uptrend. So don't mind that one, but needs a bit of work, I think. And then let's go Meta, which obviously had those big earnings a couple of days ago. Big move up, hasn't done as well on Friday than a few of the other ones we've seen, which is disappointing, but not a write-off yet. I just think it needs to find that candle. I think this one will be more targeted by the fund managers, because it's in so many more ETFs, it's in so many more baskets, so many more portfolios. So when the broader market's having a bad day, it inevitably has a bad day. Whereas so many of the other ones we saw from Matthew and Perry, they're off the beaten track. They're able to, to steer clear of that mess. So happy to give this one the benefit of the doubt. It's a great gap up, great earnings. We just need to see that turn around. So yes, but conditionally. So it is. I think it's FRP. There's no doubt about that. But plus 1/3, and it's very simple. Next demand side candle, 760, close above 760 is probably the way to go there. And I think that's it. I think we're done. I'll just scroll back down the bottom, and it looks like Matthew's saying you're saying this, but I don't think I've missed anybody's, so I think I'm okay there. Let's quickly push back to the PowerPoint and just complete the presentation for the people in the recording, reminding everybody, of course, that the content we've discussed is general. You should consider it all very carefully before you do anything with it, or seek the help of an investment professional to confirm its appropriateness for you. Trading and investing is risky. We've seen scenarios tonight where people who tune in, despite probably tuning in and knowing the model pretty well, have still lost some money, and that's inevitable. It's going to happen. But hopefully we've also seen a few that are on the right side as well. Ultimately, either way, whether you make money or lose money, it's a result of the stuff you do, not the stuff I do. But it has been an absolute pleasure chatting with you, everybody, this evening. Hope you enjoyed it. I certainly did. And it's good to be back as well. So everything's back to normal. Recordings, or sessions, I should say, every Monday night, if you're able to join me at 7 o'clock Perth time, wherever that is in the world for you, but it's 7 o'clock Perth time, and then the recording that comes out afterwards. All the best for your trading and investing until we catch up again. Bye-bye for now.